There are American families driving SUVs right now who don't yet know what's sitting in their driveway. Not a problem, not a lemon, a liability. iSeeCars analyzed over 950,000 5-year-old used vehicles sold between March 2025 and February 2026. The results hit American brands hard. The average new vehicle loses 41.8% of its value over 5 years. That number sounds bad until you look at what these 8 American SUVs are actually doing. We're not talking about 41%, we're talking about 60. 61. In some cases, close to 65% of the original sticker price gone. Dealers already know these numbers. That's why right now some of them are refusing trade-ins on vehicles they sold to families just 2 or 3 years ago. Or they're opening with offers that make owners feel physically ill. If you already own one of these SUVs, this video is your warning before you go to a dealer and find out the hard way. If you're shopping right now, this video is the research your salesman is hoping you skipped. 8 American SUVs. Real data. No filler. Let's go. Before the list, you need to understand 3 forces that are crushing American SUV values simultaneously in 2026. Because without this context, you'll think each car on this list is an isolated bad decision. It isn't, it's a pattern. First, the federal EV tax credit is gone. On September 30th, 2025, the federal EV tax credit expired. That single event removed up to $7,500 from the effective purchase price of dozens of electrified vehicles overnight. PHEVs and EVs that were priced with that credit baked into the math are now competing on a used market where buyers get zero of that benefit. The price floor dropped, the used market adjusted. Instantly. Second, recall reputations compound depreciation. A vehicle associated with won't charge headlines, brake failures, or stop sale events does not recover its market confidence in one press release. Used buyers have long memories, and right now, 2 of the biggest American EV launches in history are carrying exactly that baggage. Third, American automakers over-electrified into a collapsing incentive window. GM, Ford, and Stellantis all launched major new EV and PHEV products between 2022 and 2024, products priced with tax credits in mind. When those credits disappeared, the new car price stayed. The used market offered less. The gap became the owner's problem. Here are the 8. Car 1. Ford Mustang Mach-E. We're starting here because the data is not ambiguous. According to iSeeCars' 2026 depreciation study, based on nearly 1 million real used vehicle sales, the Ford Mustang Mach-E ranks 8th among all vehicles for 5-year depreciation. It is losing 60.8% of its original value. On a well-equipped 2021 Mach-E that originally stickered around $50,000 to $55,000, that is a loss approaching $33,000 in 5 years. And it's accelerating. Q1 2026. Mach-E sales fell 60.4% compared to the same quarter a year ago. 60% in 1 quarter. When new car sales fall that fast, the used market reads the signal immediately. Fewer buyers competing for used examples means lower offers every single time. The Mach-E is not a bad car. Ford's engineers built something genuinely capable. But the combination of aggressive original pricing, steep MSRP cuts since launch, Ford dropped prices significantly in 2023, and the disappearance of the federal tax credit has left early buyers trapped. The car is worth dramatically less than what the 2026 MSRP even suggests. If you bought it in 2021 at peak pricing, you're underwater on the math before you walk into the dealer. Car 2. Chevrolet Blazer EV. This one has a story arc that every buyer needs to hear in full. GM launched the Blazer EV in late 2023. Within weeks, it had to halt all deliveries after widespread reports of charging failures and infotainment system crashes. A stop sale event on a brand new vehicle doesn't just pause transactions. It writes a headline that lives in every used buyer's research for years. GM fixed the software, restarted sales, then cut prices to get buyers back. Then, in mid-2025, issued a safety recall for the rear parking brake wiring harness, a harness that could corrode, cause the brake to engage while driving, or fail to hold the vehicle when parked. then issued a follow-up recall in February 2026 because some of the original repairs used the wrong replacement part. Q4 2025. Blazer EV sales collapsed 77% compared to Q4 2024. Q1 2026. Sales down another 82.6%. There are currently roughly 4,000 new Blazer EV units sitting unsold on US dealer lots. An estimated 200-day supply. In the car industry, 60 days is healthy. 200 days is a crisis. Early depreciation data projects 50 to 60% or more in value loss within 3 years for 2024 models. And those are the projections before you account for a buyer's rational skepticism about a vehicle with a documented stop sale, a safety recall, and a follow-up recall because the first fix was done wrong. If you own a 2024 Blazer EV, run your VIN on the NHTSA database today and confirm every open recall is resolved before you try to trade it. Car 3. Lincoln Navigator YBSEs. The absolute dollar figures here are what every Lincoln buyer needs to sit with. According to iSeeCar's analysis covering hundreds of thousands of real sales, the Lincoln Navigator L has shed 60.3% of its value after 5 years. In dollar terms, that is an average loss of $62,069 from the original sticker price. $62,000. The Navigator L is genuinely well regarded. It offers more interior volume than the Cadillac Escalade. Its quality score edges out the Escalade in independent ratings. Ford's 3.5-liter EcoBoost V6 has its admirers, but the used market does not reward well regarded. It rewards demand. And on the used lot, a Navigator L competes against the Escalade, the Sequoia, the Expedition, and a growing number of Korean and Japanese full-size alternatives, all of which have stronger resale track records than Ford's flagship SUV. When you pay $100,000 for a vehicle and it's worth $38,000 5 years later, the segment prestige didn't transfer to the resale price. That gap belongs to the owner. Car 4. Cadillac Escalade. The Escalade is one of the most recognizable SUVs ever built. It is also one of the worst performing full-size luxury SUVs for depreciation in America right now. iSeeCar's data shows the Escalade losing 61.8% of its value after 5 years. Edmunds estimates the 5-year ownership cost for a base 2025 Escalade at $108,700. Of that, $54,287 is depreciation alone. More than half the cost of owning an Escalade is the value it sheds, and that figure is for a base model. Loaded trims start above $110,000. The dollar loss scales with whatever you paid. Here's the mechanism. The Escalade's depreciation is better than average in the first 3 years. It holds 66.3% of its value at year 3, which actually looks decent. But years 4 and 5 are where owners get hurt. By year 5, it has lost 61.8%. By year 7, iSeeCar's data shows it losing 71.1% from original MSRP. The owners who feel safe at 3 years are the ones who take the biggest hit later. Car 5. Jeep Wrangler 4xe. This is the one that has generated the most owner shock in the past 18 months, and the numbers explain why. A 2024 Wrangler Rubicon X 4xe with an MSRP of $72,000 was reported selling at auction for $33,500, a loss of nearly $40,000. Another 4xe with just 10,300 miles on it lost close to $40,000 from its original sticker. These are not isolated forum complaints. This is a pattern. 3 things hit simultaneously. The Wrangler 4xe lost its eligibility for the federal EV tax credit. First cut from $7,500 to $3,750, then eliminated entirely by September 2025. The vehicle was priced with that credit in the equation. Without it, buyers are overpaying on paper before they've driven a mile. Second, Stellantis aggressively discounted new 4xe inventory. Dealers were offering up to $15,000 off MSRP in early 2025 to move stock. When new vehicles get discounted 20%, used equivalents get repriced downward the same week. Third, the 4xe battery recall. A safety campaign required software intervention for potential battery issues. The fix for most vehicles was a monitoring patch, not a hardware replacement. Used buyers who read that closely are offering less, or walking away entirely. Dealers in some markets have reported refusing 4xe trade-ins altogether because they don't want the liability on their lots. The regular gas Wrangler is a different story. Off-road cult following, consistent demand, limited supply. The 4xe specifically is where the damage is concentrated. If your Wrangler has a blue E badge on the side, check your KBB value this week. Car 6, Ford Explorer. The Explorer isn't collapsing, it's quietly bleeding. And for a lot of families, that slow drain is more dangerous than a dramatic drop, because nobody warns you. CarEdge's depreciation analysis is direct. Drive a new Explorer off the lot and it loses over a quarter of its value in the first 2 years. The reason is simple and structural. The Explorer has been a bestseller for decades. There are enormous numbers of them in the marketplace at any moment. That healthy supply keeps a permanent ceiling on resale value. There's always another one available cheaper than yours. It is, as CarEdge puts it, difficult to recommend a new Explorer from a value perspective, because their aftermarket prices simply don't keep pace with peers. A 2025 Explorer with no options and 12,000 miles carries a trade-in value of roughly $28,000 on a vehicle that started at approximately $40,000 new. That's a $12,000 loss in roughly 1 year of normal driving. Compare that to a 2025 Honda Pilot or a Toyota Highlander in the same segment. The gap in retained value over 5 years runs into tens of thousands of dollars. The Explorer is a good family SUV. It is a poor financial instrument.
Car 7, Chevrolet Equinox, standard gas model. The Equinox deserves its own conversation because it's one of America's best-selling SUVs, and most buyers have no idea what the resale numbers actually look like. CarEdge's 2026 depreciation data shows the base 2026 Equinox depreciating 52% over 5 years, from a $28,800 purchase price down to a projected resale value of $13,792. Now compare that directly to the Honda CR-V, which starts slightly higher at $30,920, but depreciates only 29% over the same period, landing at a $21,950 resale value. The math: the Equinox costs $2,100 less to buy new. Over 5 years, it leaves you $8,158 poorer than if you'd bought the CR-V. The Equinox is not the value play it appears to be at the dealership. The sticker price creates the illusion of savings. The depreciation erases them, and then some. Car 8, Dodge Durango. This is the most complicated entry on the list because the Durango right now occupies a very specific and dangerous position in the market. The Durango platform launched in 2011. With updates, it has been the same fundamental architecture for 15 years, and right now it's actually selling. Q1 2026 deliveries were up 48%, with 20,300 units moved. So why is it on this list? Because a 15-year-old platform in its final generation, from a parent company, Stellantis, that is publicly restructuring, is one corporate decision away from what happened to the Jeep Grand Cherokee, which was officially removed from the US lineup in 2025 after a 96% decline from its sales peak. Durango iSeeCars data shows 45.5% depreciation over 5 years, which is close to average. But close to average is not the risk. The risk is what happens to resale values when a successor is confirmed, delayed, or quietly canceled. The moment Dodge announces the Durango's next generation, or confirms there isn't one, today's used market prices reset immediately. Owners who are watching closely already know Stellantis committed to the Jeep brand in this market for 3 years. 3-year commitments from pressure-tested parent companies are not the same thing as long-term futures. The Durango has one of the most loyal owner bases of any American SUV. Loyal owners do not protect resale values when supply outpaces demand. Every vehicle on this list is measured against the same standard. The Toyota RAV4. Hybrid 5-year depreciation of approximately 35.4% is part of the hybrid segment, which iSeeCars confirmed as the strongest performing major category in 2026. The Toyota 4Runner retains its value even stronger. The Lexus GX 550 holds over 60% of its value after 5 years, in the opposite direction from everything on this list. Hybrid vehicles from Toyota lost 35.4% of value. The average American SUV on this list loses between 45% and 62%. That gap, applied to a $60,000 vehicle over 5 years, is worth $15,000 to $16,000 out of your pocket. That is not a small number. That is a car payment stretched across 5 years that you are making invisibly every time your vehicle sits in the driveway. That is your signal. You do not have to sell today. You do not have to panic. But you do need to know what you're holding before a dealer tells you, with a lowball number, at the worst possible moment. The data exists. It is public. Most buyers just never look at it until it's too late. Subscribe now. Every week we show you exactly what the market is doing before it moves past you.